Only 2 weeks ago, when Apple was at 137, I said there was potential we could see all the way up to 148 plus on it. And 2 weeks later, we closed at 150. A break of this roughly 141 to 142 range is going to be very, very crucial. And it's something that could send this thing all the way up to almost 150, honestly. This was Friday that we closed on 150. So this was a massive move. It's all because we broke this yellow line I have on here. This was a major downtrend that we did break. And once we got above, it was able to stay very strong. We saw a lot of call flow supplement this move, and it continued upward and just has been one of the strongest big caps so far in the market, and has continued up and even has more potential to continue upward, which can aid the market as well. Now we go to the second thing here, SPY. A lot of bears were talking to me after the last weekly recap video that I made, and also midweek video. They thought I was crazy that I was loading the dip, saying that it was bullish for the short term. And remember, by the way, I am very bearish for this fall, especially during September, but everything does not have to go straight down, contrary to the popular belief out there that for some reason, because all the macro factors are very bearish, which I do agree on, that we have to, for some reason, continue to fall down from where we are, which I don't think that's going to happen in this case so far. I believe there's a lot more upside potential before we do end up falling lower and have a new yearly low. So as of now, I'm trading based off price action, and that paid off a lot. We saw a major bounce off my level of 3,760, which I called out in our Discord room. I said also in the Wednesday video, the day after that I called this, or the day of that I did the video, I said there's potential we could fall a little bit lower, that was possible. However, as long as the daily candle closed above the spot where I loaded at 3,760, then it would be bullish going forward. And look at what happened after it did close the daily the following day on Thursday. Continued higher and made a massive rally to 3,863. This rally on SPY was from 371 all the way to 385 over the course of only 2 days. That is major, and it squeezed out a ton of bears. So that brings us to the question, what is going to happen this week in the market? And I personally believe we're getting very, very near to a large upward move that we could see us hit all the way up to 394.50 and possibly all the way to 401. So that is a large move from where we are right now, especially from the lows where we were loading at. I personally am holding a long position at the moment, and I will continue this week to load on dips if we do get them. I believe right now, again, I could be wrong. However, I do believe as of now, the motto would be buy any dip that we get in terms of any excessive dip. It doesn't have to be like any dip right away on a short-term chart, but if we have a dip to 380, there's potential I'll add there. If we have a dip to 377 this week, potential I will add there. It's all based on the price action during the day, so I will act accordingly with it. But as of now, I believe there's a potential we could have a big rally upward from where we are right now, because characteristically when we have a lot of chop like we saw for the past 3 or 4 weeks while we've been down here at lows, we see a large move that happens right after the chop gets finished that people aren't really expecting at all. And I believe that right now we have been in a very large accumulation stage for these past couple of weeks down here. And part of the reason I believe that is because of the dark pools. So if we go to the dark pool levels here, this features the 4th one down on the OrderFlow application. And we scroll down. This is only Friday, by the way. On Friday, we saw a $2.4 billion singular dark pool print. That is very, very rare. It is very rare we have over 1 billion singular dark pool print on SPY, let alone over 2 billion. So that's a large print, and this was at 382.80, so a bit high, but still, nonetheless, this is a large print. Also, we had in signature prints, we had a 1.9 billion print, which is also pretty high relatively to what we've been seeing so far in the past 3 months. Remember, signature prints are different than singular because this is made up of 20 different orders that happened the day prior, and versus a singular, this was real time hitting the tape with only one order. And we've seen a lot of dark pool activity for this entire past week, which is uncharacteristic compared to what we were seeing over here when there was very, very minimal dark pool activity back around this time. So we're gearing up for a move. That's what the dark pools are telling me personally, and I've seen it happen many, many times in my experience with them. And because we've seen a lot of activity from this past week around this range, I believe this has been a lot of accumulation for that move that we'll have upward. It's only a matter of when that will happen. So for this week, because of how the chart looks. As of now, just based on the chart, this thing is very bullish, and there's a potential we gap up and continue upward to that target of my orange line here of 394.50. It's acted as a resistance previously, and it's a very key line I've talked about in previous videos, and it's definitely possible we can continue up with this momentum we gained from OPEX week and continue up higher, hit this level, maybe even go higher if it wants to, squeeze out a lot of bears. That is something that could happen between Monday, Tuesday, and Wednesday of this week. The more likely scenario I see that would actually be more ideal, I should say, not necessarily more likely, but more ideal for people to load potentially, and me to load even more of my position, would be we have a dip on Monday and Tuesday of this week, kind of get bears back into it one last time before continuing upward off of that. And that dip could see anywhere between 380, like I said, to 377 at the lows, and kind of chop within this range just for a few more days before continuing up off of here. Just make sure it fakes out the bears one last time. And that's another viable scenario. So there's the two scenarios you kind of could see. If we gap up big and continue upward from here, that's going to be less favorable for people to get in for a long position. So that could happen because they don't want a lot of people to get in with that long position, and it would have been more optimal to get it back here, back when I was loading. But if it does dip around here, then by all means there's potential to go long off of here, at least personally in my opinion. One other reason I think we kind of see that early week downside that could lead to a few days of maybe chop in this range of like 380 is because of the put flow we saw on Friday. So if I go to SPY here and I'm going to filter it specifically for over $500,000 worth of premium, I want to see what big money was doing. And if we filter it for that, we saw a lot of puts hit the tape after hours on Friday, which is pretty key. This is not just small money by any means. This is well over 10 million in premium for these far out of the money strikes for these 819 expiration and 916 expiration on SPY. So characteristically, when we've seen orders like these, especially after hours, the day following or the day after that, we kind of see some form of a pullback because of these prints that we did see here, and they kind of were noticing something that maybe an intermediate high was reached or close to it, and we have some form of a pullback that they're able to profit off of. So that's why I think instead of just continuing to rip upward from where we are right now, there could be some form of a pullback on Monday or Tuesday that could continue a little bit further down, like I shared with you earlier. So that's kind of my thoughts on where we are right now with it. We do need to make sure we stay above this level right here of 375 on SPY. More specifically on SPX was 3,760 where I loaded. If we have a daily close below this for some reason, then I would be all out of my long positions and I'd have to reevaluate my entire kind of count for us to go upward from here. This level is very, very key, so make sure to mark that on your chart. 3,760, very key. If a daily closed below here, then everything's kind of like off the table for buying the buy the dip to continue upward, which is my strategy for right now in the short term. So keep that in mind, and I always make sure to let you guys know when that kind of level is that would kind of change my entire thesis going forward. And I understand that there could be a potential we could get under here. A lot of things are bearish in the market, or at least in the world macro, like I said earlier. So you never know. But as a price action, my bias is to the upside as of now. So that's kind of where I'm sharing with you guys here in this video. The last two things I want to talk about is one, DXY. So the dollar. Last week, I did have a little bit more of a bearish emphasis on the dollar, which I ended up being wrong about a little bit later in the week. We did continue higher to make a pretty nice high from where we were around this range. So I do admit that I was wrong on the dollar bearishness. However, this kind of just seemed like a last bull fake out. So I was a bit right around the timing, just not precise, kind of like I have been in the past. So for this one, we did see a bit more of a higher run up for the dollar, but now we're back into that range, kind of where I was talking about bearishness earlier of that like 107 high to 108 mid. So right now the dollar looks pretty bearish because of this kind of blow off top we had on the 15-minute. This is a pretty bearish thing when you have a breakout like this that falls right back down straight off of here. So this is a hard resistance up here at like 109.2, and because of that, it kind of fell down, consolidating some more, and then fell down after that. So right now it looks like this is kind of like a chop range in terms of bearishness on the dollar. We're going to want to see us get to like around 107.80 and continue lower from that. If we get below 107.80, and can fall down like decisively below this level, that'd be good for bearishness on the dollar, which in turn can be bullish on SPX. One last thing here is the VIX, and I'm going to go to the daily chart for this one. Based on the daily chart, there was actually a bit of a fake out last week when we saw this big daily candle close below my green line that I have right here. This is the key uptrend line we had been following previously, and this day on July 8th, this was the first time we broke below it in a very, very long time, or at least at all since this line started. So this was kind of bearish for the VIX, but then the following day we gapped up right up to that line again, which means that this bearish count is kind of like off the table because of that big gap up. So it chopped around this range above the line, and then we made that decisive move back down again on OPEX day where it fell a ton. And I expect this to continue downward to around this 2150 to 22 range, which is also bullish for SPX. Another reason why I am kind of like a bull in terms of the short term on SPX. Again, I use a ton of different variables in my thesis, or at least to determine my thesis. It's not just one thing. I'm using a lot of my experience, all of these different like VIX, DXY, Apple, looking at like all the big caps, all the different charts, and then also order flow and dark pools are a large one, all mixing them together to determine my best possible setup and to determine my bias. My bias can be wrong by all means, but I like to kind of get a sense on where I think the market can go, and then base my price action off of that, find good risk reward setups, and then go there from there. So that's just the video for today. I appreciate you guys watching, and I will update you guys in the Discord throughout this week, as well as our Wednesday video, which we always post, and I'll see you guys then.